Welcome back. Fresh off of a strong earnings report last week, Bank of America is now relaunching its Investor Day, the first Investor Day in almost 15 years. The company expected to discuss growth, strategy, and the latest installments in technology and AI. The banking giant reported a double beat on third quarter earnings last week, $1.06 a share, over $28 billion in revenue. Joining me right now is the boss himself, Bank of America Chairman and CEO Brian Moynihan is with us this morning. Great to see you. Thank you so much for being here.
It's great to be here again, Maria.
So assess the quarter for us. I know capital markets drove a lot of activity and, of course, lending. But how would you characterize your earnings for the third quarter?
Well, when you have a company have 11% revenue growth, 5% expense growth, so 600 basis points of operating leverage, 31% EPS growth, improving credit quality, return on equity of 15%. It was a very good quarter, and the team did a great job.
Wow.
So it was across the board. Loan growth of 9%, deposit growth of 4%. It was across the board. And yes, the capital markets activity, both in wealth management, trading, and investment banking came in stronger than we thought. So it was a good across the board.
Those are some great numbers, Brian. And that's really why we wanted to talk to you, because we've got a dearth of data right now. We don't have any data to look at in terms of the economy. And, of course, Bank of America has incredible data, being the #1 small business lender in America, managing $4.6 trillion in client balances across the wealth management business. You see it all. How would you assess the broad economy and the consumer today?
So when you think about the American economy, obviously the U.S. consumer is one of the most powerful engines on earth. The size of what it does is as big as almost every other economy. So what we see in October so far, so last quarter we saw about 5.5% of spending, them putting money into the economy out of their accounts in every way they do it. Credit card charges, debit card charges, checks written, cash out of the ATM. That's actually growing at a little higher rate in October here. So the consumer continues to spend. Now, you'll have a lot of discussion, and you're hearing it earlier in the show, of different types of consumers, where their earnings levels, and some are slower, and lower earnings levels, and higher earnings levels. But in the aggregate, it's very strong, and that bodes well, because that's a great anchor to windward. When you move to the small business side, it's pretty interesting. Small business loan growth continues in the high single digits. Their activity is strong. You can see in their accounts, the payments they're making their employees are up 3 or 4% on a per employee basis, and their number of employees they're paying is up a little higher, because you can see the payroll runs through it. So we feel good that the small business credit quality is good. They're borrowing responsibly. They're employing people. Now, the big worry is, will that all hold as the shutdown and tariffs continue on? And that's the question on everybody's mind.
Well, for sure, certainly on business, we need to see clarity. But you've got, what, 3,600 financial centers and 15,000 ATMs right now in more than 100 markets in America. Can you characterize the difference between the high-end earners and those earners that are living paycheck to paycheck? The lower FICO score has always lived paycheck to paycheck. Are things worse off for them right now, or have they been sort of rising?
So I think that's what I was saying before. Our institute, which takes our data and then does more refined work on it, basically reported that you're still seeing growth among median income households and up to 100,000, 75,000, 100,000. They're still growing, but they're growing at a slower rate than the higher income households above that. So that shows you some of the pinch. Now, inflation's still high, and prices still are on people's minds, but they're continuing to spend. And so one of the questions, you see a lot of consumer surveys saying consumers are very concerned about X, Y, or Z. The reality is the amount of money spent in entertainment venues in October so far, meaning tickets to concerts and things like that, is up 7% over last year. The amount of money spent on cruises is up 10 to 15% over last year. So what's incongruous is when you really look what the people do, they're actually spending the money, but there is a differential. And so this is where you got to be careful. From a human being standpoint, a low, moderate income person struggling to make it, that's an issue for America and American society. From the aggregate consumer spending, it's stronger, and that's because a large part of the economy is driven by the median income households and up.
It sounds like you feel good about things. I mean, I know we're expecting a Federal Reserve cut later this week. Tomorrow we'll get that announcement. Is that going to move the needle on anything?
Well, I think our economists, if you think about the travel of the last 12 months, they would have had this time last year probably at 2.5%. thinking that GDP growth for the third, fourth quarter be 2.5, ramping back 2.5, ramping back up. They took that all the way down to the low ones, and now they're back up at around 2, a little higher. So they've sort of started recovering, and that was largely where they took it down was around Liberation Day and April 2nd. Everybody said, "Oh my gosh!" And what happens is that's moved through the system, and there's been a pattern developing of tariffs 10 to 15% on one goalpost, and 35 to 40%, and where the person ends up, you can see in the negotiations. I think people are figuring out that the impact will be an impact, but that impact is not as big as they thought. So they're raising their growth rates. And so as you look forward, our belief is the Fed will cut rates, our team's belief, our research team's belief, but they're not going to go much below 3%, and that'll kind of be achieved next year, mid-year or so. And if you think about that, that's a different rate environment, and that's the one thing. America with a higher growth rate, a little higher inflation, and a Fed funds rate at 3% is a better structured economy than having a very low interest rate because we're not growing fast enough.
Yeah.
And so they're coming around saying we're going to grow a little faster, and we'll see it play out.
Great point on that. I want to come back to small business and what's going on in the regional banks. But let's talk about this upcoming Investor Day meeting that you've got. This is your first Investor Day in 15 years. What are you trying to achieve? What do you want to tell the Wall Street analyst community?
Well, I think it's time to put the story of the company back on the table. We have 30-odd analysts that cover us. We meet with them consistently. We do hundreds of investor meetings a year, both small ones, big ones, everything between. But what we hadn't sort of is laid on the Bible on the table. This is Bank of America, and this is where we stand. The answers have been growing strongly. The NII discussion covered it up a little bit, and that's now gone, and you're seeing us grow NII at a faster rate than anybody in the industry.
This is a big deal.
Yeah.
Tell the audience what you mean by this in terms of the NII. This is what analysts are talking about. It's going to be a major growth point for Bank of America because you're on the other side of what was happening just a couple of years ago.
Yeah, and so as the rate structure went up fast and then came down, we then leveled out in NII last year, second quarter. So 24 second quarter, we've been growing every quarter since this quarter come up. We said around 15.6 billion for the quarter. That is a growth rate that is over $1 billion plus over last year's fourth quarter. So that's kicking in. That's fueled by two things. One is the loan and deposit growth, which has been strong. And then secondly, it's fueled by the repricing of assets that were put on lower interest rate environments, repricing every day and every quarter. And so that means our NII, we believe, will grow faster than we typically grow. We throw, say, 3 or 4% by activity, and a couple hundred basis points or more above that. We'll tell the investors that. We'll also tell the investors the technology investment we've made in the company over the last several years. We spent about $4 billion on initiatives and about $14 billion overall. AI is not theoretical. AI is already here at Bank of America. It's already operational. The amount of investment we make, the amount of systems and technology, the $300 billion investment in balance sheet into the markets business so Jim and the team could drive 14 consecutive quarters of growth. There's been a lot of investment going on in the company, which is because it puts a moat around our competitive position and helps us drive it.
Yeah, and you've said that 90% of employees are using the AI assistant. I mean, don't we need to see some ROI after all of this spending on AI? Have you seen a return on investment on all this spending on AI? We're going to talk with the CEO of NVIDIA tomorrow. Jensen Huang is going to be my special guest tomorrow. And what I want to know is really, what are we getting for this right now? Because we're talking about some enormous numbers right here in terms of spending on AI. $3 trillion a year is what one analyst said.
Yeah. So if you look at Bank of America and you think about the easiest way for the consumers out there and the people out there to see it is Erica. So Erica, about 8-10 years ago, we realized that a classic search engine inside our mobile app wouldn't work. It wouldn't come up with the right answer. So we went to the University of Stanford, said, give us a natural language model that'll predict answers to questions, and we built that, and that's what Erica became. In today's parlance, you call it a small language model. So we started to operationalize that in about 18, it started 18, 19. It is now up to 3 billion interactions had. It's gone from 200 intents, 200 questions it can answer to 700. It builds all the time. Just in the last 24 hours, 2 million customers would interface to Erica. So it's not theoretical. It's up and operating. Then we took that same thing, we put it into our institutional, commercial side of the business, CashPro with Erica, so commercial customers can answer the questions. And so if you look at that, and then we took the employees. What you're talking about is you're an employee of a company, and when your computer doesn't work, what do? You punch the button, and you want to get somebody to come in and fix it fast. we can talk you through your password changes or rebuilding the computer all through an AI agent that's built off the Erica technology. So you take that across the board. So the ROI is there. I think whether it comes as fast as people think or not, I think is separate. But you have to have done a lot of prep. We spent $3 or $4 billion on getting our data arrayed across the last 5, 6, 7 years. If your data isn't arrayed, it doesn't work because you can't come up with the right answer. So there's a lot of nuance to this, and that's where I think you're seeing some of the debate about. But at Bank of America, the ROI is there, and we will show people, and it's not theoretical. It's happening every day.
That is awesome, Brian. Really, really great to hear that, and we want to hear more about that. Look, I want to get back to the Investor Day because just recently you promoted 3 of your officials underneath you. People are thinking this is a little bit of a horse race now underway to eventually replace you. Is this Investor Day also about that so that you could showcase your second-in-command leadership group there so that people have an understanding of succession? You've done a great job at Bank of America after taking over during a very, very tough time of the financial crisis. Are you now thinking about stepping down at some point?
At some point, we all get old, Maria, so we got to turn it over to a new team. But look, we work hard on the question of succession planning and development of talent. And yes, Investor Day will give a showcase not only for Jim and Dean and Alistair, but for the whole team. We got a lot of talented people running this company, and so it'll showcase that. But on top of that, rest assured, the board has one of its primary missions, and one of my primary missions is to deliver a great CEO to take this company forward past the tenure of this management team and me, and that'll be an exciting proposition. It's not real near term, so I wouldn't worry about it, not unless you're trying to throw me out.
So in other words, you're not ready to step down yet, but you've got 3 people in mind that could do the job should you decide.
3 and more. And so we always are working through people and giving experiences and developing them. And it'll always come down to what they want to do and what age they are and how long we need them to work and all those types of things. But that's the primary job of a CEO working with the board, is to tee up to the board the decision process. And it's their decision ultimately, but I've got to work with the team to get the people as ready as we can be.
Do you think the board would like to see somebody in the job who understands banking, legal issues the way you did when you first came in, or somebody who's running like trading and capital markets who's seen, what, 13 quarters of growth?
It's going to take all those skill sets, and what you really want to see is somebody who can lead the company and create a team, because there's no second coming that's going to come through the door that understands every nuance, everything we do in the company, because that's just not real. So you want somebody who can actually put that team together and have that team be successful and understand the trade-offs that a CEO has to make. But that's CEO succession at our company and our company. In the end of the day, the buck stops there, and you have to think of all the constituencies. You're the only place in the house that has to make the trade-offs between the customers and teammates and the shareholders and the communities and all the people we serve. And so that's what you're just getting people ready. We have a talented team, and we're very excited about it.
By the way, this is the job of every board of a public company. They need a plan to know.
A private company, too.
And private company, too. Well, thank you for that. So is there a timeline in place in terms of when this transition takes place?
There's no specific timeline. It's not near term. No.
We want to take a break because, Brian, I got to get your take on what we're seeing in the market today, and that is these worries of potential fraud for certain regional banks and lenders in the auto sector. Let's take a break and come right back with that. Brian Moynihan will give us his take on what's going on for the regional banks, as well as the regulatory backdrop. Stay with us. I'm with the CEO of Bank of America this morning, Brian Moynihan. We'll be right back.